Good evening and welcome to Crypto News Live with me, Graham Rowan in Portugal and Dee Ludlow in sunny Wales. Now, the hot news this week is that we have now gone live with the Crypto 20 Index. We had a great session on Monday evening. We've gone through the whole thing with our subscribers, and they're now getting started on opening their accounts if necessary and making investments in those 20 that we've selected out of the 8,000 that are out there. So if you want to join them, we still have some founder subscriber places available at a very big discount to what everyone else is going to be paying. If you just go across to Crypto 20 Index, that's Crypto20 index.com, you can learn all about it and become a founder subscriber to the Crypto Research Institute there. So, and do also please like and share what you're seeing this evening as we go through the news from the last 7 days or so. And Dee, I suppose we should really start with the fact that once again, we've had some fairly volatile market movements. I mean, what's your kind of big picture overview of what we've seen happening this week?
Well, I think that it's another sort of liquidity grab by institutions. I have seen some very interesting opinions on this one. And now I think it's sort of the question is, everyone was sort of aiming for this six-figure Bitcoin price by end of year, or even end of November, but now it was end of year mainly. I think it's quite clear that's probably not going to happen now. And it makes me think, the people that have been selling, understandably, like institutions will move the market, but the people that are sort of now changed their mind on it, has some sort of bearish sentiment come in and thought, well, maybe this isn't what everybody thought it was going to be, and people have sort of flipped their opinion. Now, I've seen some very interesting opinions. I've seen some very bullish ones and some very bearish ones. I've seen one YouTuber that I think gives a pretty good analysis on a week-to-week basis, and he seems to think that the Bitcoin top was in on the last peak, and now he feels that Bitcoin is now in a bear market, and he's going to be documenting it. Now, it's had a nice bounce. That doesn't mean anything, by the way, but it's been nice that we bounced. I don't agree with him personally, even though I do value his opinion. I do feel that that we are in this sort of extended cycle, diminishing returns sort of theory. And I do think we're probably going to go on well into Q1 next year, potentially Q2. And I think that over the next couple of weeks now, moving up to Christmas, what's going to be on people's minds? Yes, people are going to be still looking at their crypto portfolio and seeing how it's performing, but where's their mind going to be? So, we'll see maybe when people break up for work and stuff and have the holidays, let's see what happens, and then let's see what happens early Jan. But I'm sort of just monitoring the market at this point, seeing where it's going. It's nice to see we've had a little bounce and found some sort of support. We'll have to see if it holds. If not, then we're probably going to go back down to around the $40,000 Bitcoin again if it doesn't hold. And let's see what happens over the next couple of weeks. But look, I think that how many times do we have the conversation of Bitcoin's pulled back, the market's pulled back? It happens all the time. So it's no good panic in this situation. It was only the week before last, we was down about 9%. And I started hearing all the bear market, sort of seeing the bear market posts and all the opinions come out that, this is it. And we're down 9%. We pulled back 50% back in May. It's just one of those things. It's a volatile asset. People take on serious leverage. And when people take on serious leverage, when liquidations start coming in, it pulls the entire market down and people start getting liquidated left, right, and center. And it's the perfect time for institutions to come in and pick up some Bitcoin. And we've seen it. If you look at the on-chain, I think it was a few wallets which had over 100 Bitcoin, sort of classes like the whales in the game. They picked up 67,000 more Bitcoin. So it's quite clear when you look at on-chain what's going on. And when you see these real big long wicks down, it does make me think, yes, it's people being liquidated, but it does make me think when the manipulation comes in, but you just got to have an open mind to this, understand it's a volatile asset. It's still, in my opinion, in a very long price discovery on its way to, well into six figures eventually. And I think you just got to take the rough with the smooth at this point. But we also got to look on the other side of, is there anything out there like this that you're going to get anywhere near the returns? So the volatility is the sort of the price you pay for the returns, in my opinion. So, it is an ongoing sort of topic that we keep talking about. But nothing's changed for me.
I think a couple of comments I would make. Firstly, I think, in terms of the institutions, I think it's always interesting to see what they're doing. So, like last weekend, one of the hedge funds, Three Arrows Capital, snapped up $400 million worth of ETH, which clearly, they said, we think lots of people were liquidating positions because of their leverage. And so we've jumped in at what we think is a bargain price and grabbed $400 million worth. It's also a case that a lot of these institutions run on a kind of annual accounting basis. So they'll start January with a whole fresh view as to what they want to invest in 2022, which could easily see very large allocations. Even small percentages to them could still be hundreds of millions, if not billions of dollars coming into the market, and again giving some support there. So I think we need to wait and see what happens in January. And the other thing I think just to comment on is that it's been because of banana syndrome, as I call it, and all the latest stupid panics around that, which even the World Health Organization is saying has been overdone. That's affected the wider market. So there's been a risk off kind of attitude, and we've seen tech stocks taking a tumble. I was just checking one of mine the other day. That it's a UK technology company that's very much into the sort of agricultural revolution that's going on, and it's down 20%, 25% in the month of November. And this was a star performer for the previous 12, 18 months. So it's not just cryptos that are taking this pain. It's a wider market kind of risk off approach as people think, well, when is it all going to end? Here we go again. Are we into lockdowns, et cetera, et cetera? So I think you've got to sort of weigh in the fact that some of it is the fact that it's the general market conditions, and some of it is this business of liquidating heavily leveraged positions and maybe a little bit of manipulation by some of the whales in the market. So I think our attitude has always been steady as you go, dollar cost averaging month after month. So really all it means is this month you'll be getting a bit more for your money. And I think you just have to take that calm kind of attitude at the moment and just not follow the kind of panickers that are selling.
If you're somebody that is investing in the technology behind this, then this is another opportunity to pick, like you said, a few of these tokens up at a discount. And if you look at the smart money, which is why I feel that when these times happen, look at what the smart money is doing. We've seen people, picking up a ton of Bitcoin in this. I've seen here, I've made a note that on Whale Stats, it says the fourth biggest Ethereum wallet in the top 1,000 Ethereum wallets now holds over 1.2 billion worth of FTT, which is the FTX exchange native token. He basically picked up $500 million worth recently of the FTT token. So look, we're talking about a token which is FTX, massive company, but this isn't someone picking up Bitcoin or ETH. This is somebody that's selling ETH to buy FTX's token. So you've got to ask yourself at this stage is if we're heading into a bear market, it's probably one of the tokens you wouldn't really want to hold along with all the other alts. That we're probably going to see very big dips if people was calling bear markets. So those whale wallets holding billions of dollars worth of cryptocurrency picking up there. That's where you've got to look at the smart wallet, smart money, look at the on-chain metrics, and then you can make your mind up from there. But definitely, just looking at what we're doing, and as far as the crypto 20, anyone that sort of dollar cost averaged in from May on our initial launch would still be in significant profit. Obviously, depending on when you dollar cost averaged in, but in this market, you still be in profit if you dollar cost averaged in, and average that across the 20 tokens. So it is important to diversify and take the gently gets the Bentley approach.
It's the Bentley. Okay, yeah, I like it. But yeah, and actually, to be fair, we launched the Crypto 20 initially in a down market, didn't we? So yes. we've all kind of been there and done that. But one of the things that really I think was reinforced in my thinking as we went through the 20 on Monday night was how in the mainstream media and a lot of the things you see online, a lot of people seem to think that all of these things are just trying to compete with the pound or the dollar or the euro to be a currency you're going to buy a coffee with in Starbucks, when in reality they're doing all sorts of different things in the real world, everything from digital advertising to supply chain management. So I think, if people are watching us who don't really know much about the sector, it's important that you broaden your thinking about what these companies are actually doing, because in many ways it's not so much that you're investing in a currency, you're investing in a company that's trying to make some aspect of the world a better place, if you like, if that's not too trite. Which, and for me, I'm a great believer in capitalism and free markets. I remember them. I'm old enough to remember them. We don't have them now, but it's lovely to see that the people that were once the disruptors, like Google and Facebook, are themselves going to be disrupted by some of these new companies doing different and better things, and perhaps particularly, I think, sharing the value amongst more than just the shareholders of Google and Facebook. I think there's some really powerful changes going on that are being brought in by these companies that go way beyond just whether buying a cup of coffee with them.
Yeah, definitely. So Graham, we've sort of moving on from the Crypto 20 at the moment. So a lot has been going on this week as far as news, as always. I think that a good place to probably we'll start this week would be this sort of CIA getting involved in crypto, right? So that's the CIA. So there's everybody's involved, right? Anyway, right? And the CIA, I read that, not the CIA, but the FBI hold X amount of Bitcoin from seizures. And the CIA talking about crypto, and I have seen that they're sort of, I wouldn't, maybe as an excuse, maybe as not, but their sort of reason for getting into crypto is because of these sort of malware attacks, where an attacker locks in this and encrypts victims' data and tries to hold it for a ransom, and then they want Bitcoin or Monero or whatever to get paid to give it back. So I've seen they've gone down that sort of avenue as to say this is the reason why we're looking at cryptocurrency. I'm not sure. What's your thoughts on it?
Oh, well, that's always a great one, isn't it? It's a bit like saying everything that's happened in the last 18 months is to keep us all safe. I mean, it's a grand excuse for doing anything. So, but bear in mind, the CIA are more like, they're the spooks, they're the ones that are spying on us. Whereas if it was kind of crime to do with money laundering and all that, that's more kind of FBI territory or whatever, isn't it? So these guys it's why are they spying on it? And the suggestion is that they've actually been infiltrating social media, and even trying to influence people on social media. But also there's quite an interesting and rather dark line in one of the quotes. He says, they're looking into it and they're feeding their crypto information to other parts of the American government. They're looking at second and third order consequences and providing colleagues in other parts of the US government with solid intelligence on what we're seeing. And there's even a theory that Satoshi Nakamoto actually is the CIA. But I mean, so it's as tinfoil hat as you like. But yeah, I mean, I think they'll be obviously under the cover of potential ransomware and so on. They're going to be spying on, probably whatever we're doing with our exchanges, whatever we're doing with our accounts, particularly perhaps the bigger movements. But I wonder if part of the underlying rationale is to say, look, how big a threat is this to the current financial system? All this DeFi stuff, all of this, moving away from central control, politicians and central banks and high street banks, commercial banks becoming kind of irrelevant. That's radical. And they may see that, this is the country that, gave us this kind of reds under the bed paranoia of the 1950s. They may see that as a challenge to, American security and safety, and certainly, of course, a challenge to the dominance of the mighty dollar. So maybe they've actually been asked from a national security angle, not so much really. I mean, ransomware, it became a bit of an issue. They had that big thing with the was it the pipeline on the east coast, I think, that was damaged or something, that they pay a ransom. So there's a bit of that going on, and it's certainly getting their attention. But I'm sure this is bigger picture stuff, looking at the entire future and security and safety of the world's financial system, which is enormously biased in America's favor. With America, with the dollar as the reserve currency, with euro dollars, I think about 70% of world trade is in the dollar. If some upstart cryptos and DeFi system is threatening that, that's probably more impactful than any kind of military campaign might be in terms of the future. So I suspect that's kind of where they're coming from.
Yeah, now there's a few things there. So firstly, I think that the initial worry, as of all of these entities, BIS, IMF, central banks, is that these people like myself, yourself, and other people that's investing in crypto aren't investing in the traditional assets that they would like. So our sort of money isn't in the system regardless, right? So we've already taken our money out of the system. So that's one thing. Two, you mentioned potentially the Satoshi Nakamoto sort of, is the CIA Satoshi? Well, technically, we know who Satoshi is now, because Mr. Craig Wright apparently has won his case now as being Satoshi Nakamoto the last couple of days. How on earth he's won that case, I do not know. Without, it's quite easy to do. Like, why don't you, if you just move the coins in Satoshi's wallet, we'll find out who Satoshi is. But Mr. Craig Wright didn't do that, but somehow they've named him as Satoshi, right? So, but the good news is the market has pulled back anyway. It didn't, affect the market. So it makes me believe that, most investors do not believe Craig Wright is Satoshi. Otherwise, if he was and they thought he was, I would assume the market would probably dump pretty badly. So that's the one thing, right? Secondly, moving on to what you was talking about with these sort of entities, central banks, IMF, etc. Well, there's a few things I wouldn't mind talking about. So I've got some actual things up on the screen I want to share. So the BIS has recently talked about decentralized finance.
This is a bank for international settlements. It's kind of like a central bank of central banks, really, isn't it?
The overseer of overseers. There's always got to be
but who oversees them?
Exactly. There's always somebody who's supervising. They're saying now how DeFi is going to cause a concern for the financial system, as they do. Now, what made me chuckle a little bit about this is it says that DeFi is prone to substantial financial vulnerabilities. It's saying that its concerns over solvency could impact fiat-pegged crypto assets like stable coins. A situation could lead to massive simultaneous withdrawals and ultimately default. And then this is what made me laugh a little bit. So for instance, stable coins, the grease between the DeFi wheels, are subject to classic runs. The back end of liquid claims with less liquid reserve assets can touch off downward spirals into those stemming from redemptions in the investment fund industry. So, once again, they're concerned about these fiat-backed assets and what they're backed by. And it's like, well, it's no difference to the system we're in. I'm not a massive fan of some of these stable coins, but they serve their purpose. And right now, they're no different. If you want to talk about stable coins being Ponzi's, which potentially some of them are, we know we potentially know the stable coins. We actually know our banking system's a complete Ponzi. So I do appreciate their concern for us, and that they're looking out for us, and they don't want people like ourselves running into any sort of trouble. And I'm happy they're concerned, but what's your thoughts on the BIS and their sort of look?
I would take the eye out the middle, perhaps. But it really is. I mean, we're going to see a lot of this, and we are seeing a lot of this. It's these guys are worried about their future role. They're worried about the core of the financial system, because it is a revolution. It is radical. They may not be fighting in the streets, but this is quietly under the radar in many cases, certainly under the radar of the average man in the street who is clueless that this is going on. But this is changing it's the plumbing and the pipework and the infrastructure of the world's financial system that's changing. And that is a radical change with some enormous vested interests in Wall Street, in the International Monetary Fund, the Bank of International Settlements, the central banks, the politicians, the lobbies that all of those people are subject to. They're all wanting to maintain the status quo because they're all on the gravy train doing so well out of it. And the man in the street doesn't realize he's getting poorer as a result of deliberate central bank policies over the last 15 years. When certain things like fuel or food prices go up, then you can get flare points, but on the whole, this gradual erosion of wealth, the wages not keeping up with currency debasement and so on, that's been going on for at least 15, arguably 40 years now. So they get away with it because most people don't understand it. So at the moment they're trying to paint this very negative picture to protect their own position. And of course, just as we were talking about with banana syndrome, there's nothing better than saying, hey, this is all to keep you safe, guys. We're just looking after you. We got your back here. So we're just going to get rid of all this stuff over here that we couldn't actually control. So ultimately it's going to come back to the old chestnut of who's regulating it and how. But the fact they're making these sort of statements, and I think the IMF's been making similar kind of statements, they don't really get it. Yeah, I suspect behind the scenes, I suspect they're really working hard to try and get more knowledge and understanding and expertise in this, which we're starting to see from some of the more enlightened financial institutions, the commercial ones, but the regulatory ones, and things like the BIS, I mean, must just be the ultimate career gravy train. I mean, who cares what they do or say? They just get enormous salaries. They go on junkets. They go speak at conferences. But really, I mean, nothing changes with these guys. They're not really connected in many ways to the real economy. So I think they can pontificate all they like, but it's happening. It's gathering strength. There are challenges and issues. The infrastructure is not as good as it could be. But then, we've had plenty of problems with the mainstream systems. We've had data hacking in some of the biggest financial institutions in the world, including also in the American government, the American military. So I think you have to put this in perspective. It's important, but that's not going to stop innovation, and you can't stop innovation once that genie's out the bottle.
Exactly. And talking about the IMF, the International Monetary Fund, Mr. Jack Mallers, who we spoke about probably 6-7 weeks ago now, when he integrated Stripe with Twitter using the Lightning Network for basically free transactions via Twitter. Recently, I just pulled an article up here, and recently, this is what he said. So he said, I actually just presented at the IMF, and this is what I told them. The G20 and the UN have a mandate to lower the cost of remittance and cross-border payments to 5%. And it's because low-wage workers, immigrants, and refugees are reliant on sending money back to smaller markets. He says, I think if the UN and the G20 really want to lower remitting costs and want to improve financial inclusion, want to build stability in financial markets, my pitch to them is you should take a look at Bitcoin and stop trying to mandate lower prices for Western Union. It's an opt-in system, and El Salvador is using it to improve the quality of their citizens' lives. So what if it was a hammer or a nail, or it's Bitcoin? It's just a tool. If you have a problem with people improving their lives, then citizens' lives, then I have a problem with you. Then I really question your motives, right? So then he says that that's about as negative as Mallers is willing to get. We should be celebrating because humans have invented the best financial tool in history, and it's an exciting time to be alive and use it. Now, we know how Jack Mallers is a young individual that really doesn't care what anybody thinks. He's very outspoken. He's got a very bubbly personality, the way he's very direct. And I can actually imagine him from watching him on YouTube saying this to the IMF, but he's basically pointed the gun at them and saying, listen, this is what's happening. You need to wake up and look at this. Stop running down what El Salvador's doing. Take a look at this and use it as a tool to first and foremost stabilize our financial system before we even look at improving it, just stabilizing it. So yeah, what's your thoughts on that, Graham?
Well, is there any record of how they responded to this tirade?
I didn't, it's not on the article, so yeah.
I'd love to have been a fly on the wall, but it feels a bit like Nigel Farage addressing the European Parliament. It's kind of, you sort of feel it'd be that kind of a response. It's turkeys and Christmas, isn't it? So what he could have said was, of course, at the same time as adopting this, why don't you just abolish yourselves because you'd become irrelevant in this new world? So I think he's one of those great innovators, right? I think he's right up there with the likes of Elon Musk, as somebody who is just radical, thinks out the box. But also, I think what's impressed me is the speed with which he's got stuff done, and this is always a recurring theme of entrepreneurs, that they can not only make radical change, but make it happen so quickly. And this is obviously a characteristic we've talked about many times within the whole crypto and DeFi space. But, if you look what he's done in El Salvador, you look what he's done with Twitter, these are, for many traditional companies, these would be multi-year projects that, we'll get back to you in 2025 and, we'll issue a report and let you know when we're ready, and we'll be 10 times over budget and it won't quite work the way we originally planned. He just makes this stuff happen. It's absolutely incredible. So, and again, there's a lesson in that, that these platforms make the transactions happen quickly, but the infrastructure can be built very quickly. And for people involved, anyone that's trying to do that kind of remittance stuff, it is potentially life changing, because the amounts they could actually get through to their families would be in some cases 15-18% higher, and instantly instead of days and days later. So yeah, I think it's great that people like that make those challenging statements, but that's really the start. There's got to be an awful lot of work following that up to actually make change happen. And I think we've got to actually have a bit more engagement with politicians, because there's an interesting, if I can just bring it in at this point, I was reading an interesting thing about South Korea, of all places, which has actually been quite negative towards the crypto space. They've got an election coming up in March, and the guy that's in at the moment got a landslide back in 2017 because he really appealed to young voters. But since then, his government has been very negative in everything it's said about cryptos. Well, the guy that's going to be his main opposition candidate in March has got wise to the fact that these kind of they call them the 2030 generation. They're aged between 20 and 39. So this includes you, D. And they want to attract the votes of that generation. So they're going much more positive now on cryptos and saying that they are both an investment and a means of transacting exchange of value. So, when you start seeing that, the demographic influence of younger people with politicians saying, and as we know, adoption of cryptos and DeFi is much higher among younger people. It's almost inverse to age. The further down the age ladder you go, the higher the rate of adoption, because they've grown up in digital environments and they're absolutely comfortable with it. If those people use their influence with politicians, then I think we could start to force some change and to force a more considered response from regulators and institutions, because these are the voters of the next election, and it's a big bulge of population in that age group, and so you can't just keep thinking about the old millennials like me. If you want to attract the big votes among young people, one of the things that they like is the flexibility of a crypto and DeFi world, and you're going to have to deliver it for them.
Yeah, I see as well that the Korean crypto asset daily market trading volume is around $12 billion, and the composite index is 16 billion. So it's not even that far away. The fact that, I understand that they're making changes like you just mentioned. And I did see that they've now sort of proposed to sort of levy a 20% tax on gains over, there's 2.5 million Korean won, but that's only around $2,000. So, it's not a lot really. But the fact of the matter is, like you said, they have changed their tune on it. And I think they understand, like many countries are, the world is changing, and you do have to adapt to it, because I think anyone with an ounce of common sense would know that cryptocurrency is not going away. You go about as much chance as this going away as the internet was going to go away. It's not going anywhere, right? In one way or another, it's going to stay.
But one of the things that I can certainly recall, and again, you're probably a little bit too young, is that when the internet came out, you could almost divide the corporate world into those that got it and those that didn't. And some companies were really late to the party with the internet, and had to play. Even Microsoft was very late to the party, because everything they did was based around servers you had in your office or your home, and this idea of kind of a global network just seemed to totally screw their business model, so it took them a long time to eventually catch on, but they had the resources then to make a go of it. I think we're seeing the same thing here. So some of the existing corporations and financial institutions are starting to get it, or at least they're starting to appear to get it. One of the things I thought was fascinating, that I saw the article this week, that Visa is launching crypto consulting services. Now, 6 months ago, they knew bugger all about cryptos.
That's what I thought.
Now, let me tell you all about cryptos, but write me a big check and I'll send my consultants in. I mean, they know nothing about this, and yet they're saying they're helping their clients, and they're obviously, they have a trusted long-term relationship with their clients, and their clients are coming to them because their clients are clueless, and they're saying, do you know anything about this stuff, Visa? And they're sort of saying, yeah, absolutely. We're going to launch these consulting services, charge you 20,000 a day or something. So, but I think it's quite clever. I think it's quite a clever strategy, so that already they're seeing that they need to be positioned as experts in this space, and they'll be frantically backfilling and trying to, poach some people from little crypto companies around the corner. But they're saying, hey, we've got all these crypto services, and there's a quote from a guy: "We came to Visa to learn more about digital currency and what's most relevant for the various business lines and the way we serve our customers." I thought, blimey, how naive are you? That's like going to your high street bank, and saying, "Excuse me, can you teach me about cryptos?" What?
Yeah.
But they're doing it, and they're saying that they're saying that adoption's at record levels. I think they did a survey of 6,000 financial decision makers across 8 markets. They said that crypto awareness had reached 94%, and that it's moving from a niche asset class for a small community of investors to a broader market that's increasingly accessible for mainstream adopters. So, they're smelling the coffee, and they are trying to position themselves at the heart of it, even though it's probably 0.0001% of their business right now. But yeah, it's I think it's a real sign of mainstream adoption when they start trying to position themselves as experts. And the big four will be doing the same thing. They'll be starting little skunk works divisions that are crypto experts at PwC and Ernst and Young and all that kind of thing, because they can smell the money, and you only need to know 5% more than the client to get away with it. So that's what I think we'll see happening.
Yeah, I've seen as well. So it's funny because they're saying that, it says they will offer advice to financial institutions, retailers, and other firms on everything from rolling out crypto features to exploring non-fungible tokens. And it just baffles me that they're offering advice on this, just like you said. But one positive out of it I read was, says that the reason why they're doing this is because they hope they can help further mainstream adoption of Bitcoin and other digital currencies. So the fact that that's what they said is a big plus, because we talked about this before, Visa and MasterCard are the monopoly in the space. If those two massive companies help in further mainstream adoption to Bitcoin and other digital assets, then it's only good for the space and the entire ecosystem anyway. So let them do what they're doing. Let them, whatever it is, whatever team they have behind them. And like we said, the hardest thing about cryptocurrency is when Apple blew up as a tech company, and Tesla and all these tech companies that blew up, the demand for jobs, people want to work for them companies because I want to work for Apple, I want to work for Tesla. But in cryptocurrency, people aren't queuing up to go and work for MasterCard and Visa's department of cryptocurrency, because anyone that is doing pretty good or knows quite a lot about it are involved in their own projects. So this is where we talked about Facebook. I feel they're probably going to struggle to hire 10,000 people to work on the metaverse. They're probably going to have to go to maybe first year uni students and understand a bit about DeFi and say, do you want some work experience? Because people that are coming out of the back of it, like I said to you at that Polkadot meeting, there's a couple of lads from Cambridge, and they said our entire DeFi class are all working on their own projects. So that's a whole class, a whole year, a class of DeFi that is not using what their masters to go in and get a job with a tech company using their knowledge. They're starting their own thing. And that guy said to me, so we got VCs queuing up to throw money at us. We don't need to go and get jobs.
No, I think that's what you've got there is this convergence of the new digital technologies with a new spirit of entrepreneurship, which is fantastic. And these people are getting younger and younger, and the money that's sloshing around, it's almost scary. It's a bit like 1999. It's like show me a business plan with crypto written in instead of .com, and I'll give you $100 million. So I'm slightly nervous about some of those businesses. But a very important quote from from Visa's global head of data and commerce solutions. He said, "Crypto represents a technological shift for money movement and digital ownership. As consumers change their approach to investing, where they bank, and their views on the future of money, every financial institution will need a crypto strategy." Every financial institution will need a crypto strategy. And I think he's right on the money there. And there'll be early adopters that are a bit smarter, and there'll be laggards. But later on in the same article, they actually admit that one of the reasons for this announcement is they hope that people will think Visa is cool. And that plays back to what you're saying. Maybe that's part of their recruitment strategy. If we make ourselves seem cool, some of these whiz kids might just be prepared to come and get a job with the big company benefits. But it has to be, I would have thought, a pretty sensational package to match what they think they can go and make in Silicon Valley or whatever.
Yeah, maybe MasterCard and Visa are making enough money off card payments, so they need to offer consultancy now.
Yes, that'll be it. My goodness, I don't know. I really don't know. But yeah, so I mean, I was pleased to see that. I think there's a lot more things bubbling under. I mean, the government of Gibraltar has announced it's going to start integrating the blockchain with its legacy systems to give it a stronger kind of infrastructure there. I mean, I'd love to see how that's going to happen, but people are announcing these things. There's also another partnership I saw between Nexo, which is a crypto lender, and Fidelity Digital Assets. They're going to offer custodial and lending services. So these combinations of the big existing institutions and the little techie kind of companies. I think that's going to be a big growth area as we go to 22.
I agree. I think so too, and that's huge. Fidelity and Nexo. I didn't know. I haven't seen that one. That's a big move, because Nexo, one of my probably favorite platforms out there. For what they do and what they offer, and Fidelity being as big as they are, I've seen the pros of what Nexo are doing. So that's a huge partnership there.
And what they're saying is they're doing it for institutional investors. It's not for the likes of you and me. This is for the big bucks that's going to come in, and you'd have to assume that that's going to start coming in maybe later next year, So when we talk about, this wall of money that we've been talking about for a while, okay, we still haven't really got the ETFs, certainly not the ones that are, native to things like Bitcoin and Ether going, but there are funds that are launching, and there's infrastructure being built to enable these institutions to make these investments in a way that they're comfortable with, which can only help that wall of money to arrive. I suppose what I'll be interested to see is how what their investment management strategy is, because when they go into the stock markets, they tend to have criteria about when they go in and when they come out. And given the volatility of these markets that we've been talking about forever, I wonder whether they'd have to change things like perhaps algorithms that would normally trigger automated selling at a certain point. You're certainly going to have to extend the stops, aren't you, if you're going to avoid being stopped out every other day in these markets. So I don't know, how do you think they'll tackle that?
I'm not quite sure yet. I think I'm not sure how they would tackle that right now, personally. But what I can say on this is what I do like about, like, Fidelity is a company that quite clearly wants huge exposure to crypto. They are trying everything they possibly can. They're the ones that went to the SEC. They're the ones that wanted to offer exposure to crypto assets very early on. Now they're partnering with Nexo. So it's nice to see companies of that size getting involved in this. How they're going to structure it with their clients and etc. We'll have to see how that happens. But as of right now, it's just nice to see companies at that size, even, they're really pressing to get involved in this, and they're pressing to get something over the line. I think Fidelity was the company that actually went to the SEC and was like, you need to basically get an ETF signed off here. So it's going to be an interesting Q1.
Indeed. And the other thing that caught my eye this week was a few announcements in the non-fungible token space. One of them being that, one of the most famous kind of humanoid robots driven by AI is Sophia, who you may have come across. I've come across Eidos, the robotic artist. In fact, I got one of her pictures hanging on my wall. But now Sophia is she's going to be tokenized. A virtual anime version of Sophia is going to be tokenized and auctioned off as part of a metaverse project called Noah's Ark. And it's a partnership between the developers of Sophia and Binance. So it'll be interesting to see how that one goes. And then also the Voices of Classic Rock have announced a series of non-fungible tokens featuring a group called the Beatles. And each of those NFTs corresponds to one of the Fab Four, featuring an interview in a WAV format alongside a portrait. They're going to be minted on Ethereum, and bids can only be placed in Ether. And the starting bids are going to be 1.25 ETH, which is around about $4,000. So now we've got NFTs of the Beatles. They're all getting in on the act here. And the Wikipedia founder, Jimbo Wales, is offering his first ever site edit as an NFT. He's copying the Twitter guy, isn't he, here? It's going to be called The Birth of Wikipedia, including the desktop computer that he created it from, which was an iMac G3. I think that was those big colored plastic things, as I recall, wasn't it? So that's Christie's are doing the auction of that one. So it's good to see that things are moving forward on the NFT front.
Yes, it's good to see that, because especially to talk about the sort of NFT bubble and stuff, still ticking over, and I think everyone's trying to get involved in the NFT space right now.
I know, and in fact, it's something we're looking at from the perspective of the Crypto Research Institute. We're looking at turning our subscriptions into NFTs, because you can attach all kinds of benefits to them and value to them, and you can actually turn what was previously an expense into an asset. And so we're now, working on a project to achieve that within the Crypto Research Institute. Just a reminder that if you're looking for what to invest in, we can't give investment advice. So what we do is we publish the results of our research as a Crypto 20 index, and then we take you through that from soup to nuts as to this is the 20 components, this is why they're in there, this is why we think they're going to do well, and then we've also got some videos that just explain the mechanics of how you set up accounts on the exchanges, how you make those investments, and everything else, etc. So it's obviously your choice as to what you invest in, but if you want to narrow the whole kind of wild west of 8,000 cryptos down to just 20, that's what we've done for you. And you'll see that at crypto20index.com. And we would love to welcome you along to the Institute. And we have a monthly get together And we also do some mid-month stuff by email. And we just keep you abreast of everything we're investing in and why. If that's of interest, obviously do get involved. So I think you're not long for Wales. You're off to Dubai again soon. Is that right,
Yes,
Dee?
just after Christmas, I'll be back in the sunshine.
I was going to say, what's the temperature in Dubai today? Is it about 30-ish?
I'm not sure around now though. Yeah, 28, 29, 30 maybe. Definitely a lot warmer than where I am right now.
Oh yeah. So which storm is it this week? Was it Barra or something?
I don't know. There's new names every week, but all I know is it bloody cold and windy. So yeah,
Oh God,
it's
dear,
windy.
dear, dear. All right. Well,
Yeah.
I think well, time is against us again. We're just about running out of time here. So,
Yeah,
shall we do this again next week? You think, Dee?
I think that's a good idea.
Okay. Well, have a great
Yeah,
week, and thanks for watching, everyone. And we'll talk to you again
thanks.
very soon on the next Crypto News Live.